Welcome to the 4-Year Journey series. This is Bob Loukas. It is May 17th today. I hope you're all doing really well. This obviously is a follow-up to previous videos I've published on the 4-Year Journey website and YouTube. If you have not seen any of those videos, I encourage you to first stop this video, go back and watch the 4-year cycle video and also the HODL strategy video about allocation. Those two videos will frame and provide the foundation to understand this and subsequent videos. So please do yourself a favor and watch those first. Today, this video is going to cover getting your position and establishing that position for the 4-year journey. In my last 3 videos dating back to December or even January when that was released on YouTube, I made it very clear that the lows were either in or very close to being in, and that everyone should be fully allocated for the long term. I repeated that kind of warning in April when the market moved higher sharply from the $4,200 area, and of course I repeated that numerous times since. It seems like though many people still want to time the bottom. Many people feel that they want to get a bit of discount on their allocation or their purchase. And I think right now they're seeing this market up towards 8,300, 400. It's pulled back quite a bit today, considerably to 7,500 and below. But even still, I know many of you feel as if you don't have the right allocation or you don't have enough allocated to your long-term strategy, and that you're desperate at this point, hoping that the market does give you a significant pullback to buy back in. You may get that wish, you may not. Even if the market does pull back considerably towards, say, $6,000, I'm not sure if you're mentally prepared to pull the trigger. And that is, unfortunately, kind of the story I hear often at this point in the early stage of a bull market. People trying to get too cute on their purchase, thinking they can get more BTC ahead of the next big move, and of course really ignoring the fact that this is mostly about where the potential is, the potential in the next couple of years for Bitcoin to run considerably higher. And I'll show you in a minute again where I think it can go. People are ignoring that opportunity and looking for entry, and that's going to cost them in the end. And I think many people have realized already that they've paying the market a penalty right now for missing the initial $3,700 buy signal that I provided, and then the other one at $4,700, and then again at $5,400. I don't think we see those prices again. If we do, like I said, I'm sure most of you or many of you will not take advantage. Even still, the price has doubled here, so the penalty for getting in late is that you now get less BTC where your goal was to get more BTC. So the point of this video is going to be to not make that mistake again and to get your position right now when the opportunity still affords you the opportunity to get long and to take advantage of still what lies ahead. Now I'm going to look at Bitcoin on the short-term chart here, and I'm going to be perfectly honest with you here, and it's in my previous videos. I did not expect the market to pierce the $6,000 area and exceed that area for any significant amount of time. I thought there might be a chance we get through on an intraday basis, but really my expectation has been that we chop around kind of this $4,200 to the $6,000 range for a considerable amount of time here in 2019, developing that foundation and developing that base before making that move above the 6,000 area where we saw many of the previous lows during the bear market in 2018 before making that move higher. And I think many of you kind of took that as a reason for not getting your allocation or for not being fully invested, thinking that, yeah, it's at 5,000, 55, 6,000. Why buy now when Bob is saying it could go back down and retest December lows or February lows? Why allocate now? But I still went ahead and fully allocated before that point, And I made it very clear in the last video on why at $5,300 and $5,400 you should still get a full allocation and be allocated. And I'm going to play that video right now from the April video for you to see exactly what I meant by that. So I get the question a lot, hey, you've been talking about this big retrace back to the December lows or a big shakeout and things like that. So why should I buy now? Why should I buy my 5% or 10% allocation today if I don't have it when you expect Bitcoin to go back down? And that's a good question. I mean, it makes sense to some extent, right? If I'm talking about a $2,000 drop in Bitcoin at 30 or 40% drop, why the hell would you want to get in now? Well, the answer is kind of simple. It is that, one, the opportunity here is for a 40x move. So you don't want to be playing around with the entry when really this is all about the holding and the smart holding and being able to hold through the larger numbers that we plan to see in the future. It's all going to become irrelevant if Bitcoin gets to 150,000 and you haven't gotten that position yet, right? There's a chance. And Bitcoin's a crazy volatile asset that has a huge following. There's a chance that from this level today, I'm going to flip to a chart, and here's the weekly, right? There's a chance now that Bitcoin goes higher and does not necessarily even come back into this area. It's not what I expect at the moment, but there's a chance. And if you don't have that allocation and something like that plays out, you're not going to be able to get in. And if you do get in, it's not going to be with the right allocation. You're going to be pretty upset that it's already doubled or more in price. And I'm telling you, you're not going to be able to get on board with a strategy like this. So if Bitcoin does something like this and gets to say 7,500, but then retraces back down, to no more than sort of 6,000, and then sort of spends a lot of the time on the bottom there before going higher, you're going to find it very hard to get any type of allocation based on this, because you're looking and your eye is focused on this 3,000, even 2,000 area and 4,000 for one more time. I mean, there comes a point where there just isn't another one more time down, right? Now, okay, so welcome back. Here is a weekly chart. Currently, you will recall this type of allocate or view that I had back sort of in April, that we chop around, maybe even get this big final shakeout before kind of coming higher. That now you can kind of throw out the window, in my opinion. I believe now that we have pierced this area, and this area provided very to no support, resistance at all, that we're now going to start to possibly see a base build well above this breakdown point. I don't think we even get, and this is a Bitstamp chart, so it's showing a wick lower here today that is not present on most exchanges, but we have topped for the 60-day cycle here. We are coming down to a low, but I would be very careful here trying to get cute on timing. I know some of you are like, okay, finally maybe the market will let me back in today. Now trading at 7,100 as I record this, down from 8,400. But let me warn you, the same reasons why you missed the opportunity back here in the 5,100 area still play and is still valid today. The market right now is giving you an opportunity to get something lower than the 8,400 that it peaked at. But if you look at this cluster right here where it broke down, there is a significant kind of drop here and then a significant rally at the same time. I don't think we sort of get too much below, if anything, below this drop right now. So we are basically, that's at 63.80. We kind of wicked down there on many exchanges towards 64 and 6,600. I think we probably get a test of that in the coming days or week. But you're playing with fire here. You're looking to save $500 to $1,000 again. And the possibility is that you don't get that price and that Bitcoin moves higher and you're faced with the same dilemma. So all I can say to everybody right now, and this is going to get repetitive, but it seems like many of you are still waiting, looking for a better price. All I can say is do not wait too long. And if you get a price anywhere near 6,400, I suggest you jump all over that. That is a $2,000 drop from the highs just this week and last week, and that to me, in a massive move and massive uptrend, is basically a gift. Back to a daily chart here. In a bull market, the dips can be as steep as 30 and 35%. So even if you draw down from the 8400 area and you move here, so look, 20% right here is at the 6600 area, and then you're kind of, your 30% is all the way down here at 5800. We're not too far away from that point, and if you're thinking that you're going to get more than the 30% dip, then you're playing with pennies here to potentially miss out on thousands and thousands of dollars. Don't do it. I think we're now in the position where you want to be looking to fill up if you have not, and get that full HODL allocation that I talked about in the prior videos, so you are now ready and set to go for the move that's coming ahead. Guys, it's really important to understand that we've seen 3 massive parabolic moves of 100x in the first 10 years of Bitcoin, and clearly with the 4-year cycle in December, we are in the early stages of what I believe is a 4th parabolic move that should, from the 3,200 low areas in December, move by close to another 100x. We're talking about a massive opportunity that most people in the history of kind of investing and trading, you just never see one of these opportunities present themselves, let alone 3 that have passed, and most likely a 4th that is on our doorstep. And it kind of gets tiring to hear people ask me over and over again, should I buy now? Should I wait for a pullback? Should I buy? I didn't get enough. Do you think it's going to go to 4,200? Do you think it's going to go to 5,000? I'm kind of tired of answering the same question. People have no allocation here to what looks like is going to be another massive move, and they want to get cute on a $1,000 or $2,000 move in Bitcoin when really they're risking another parabolic move like this. You have to understand one very important thing. Listen to me clearly here. This is a nascent technology. It is revolutionary technology, especially when it comes to the application of crypto blockchain as it relates to money itself. It's a new spin on money that is only just beginning to gain some traction, but we are extremely early in this adoption period, and the benefit that you have being the use case, that Bitcoin's use case is mostly money at this point, is that it gets priced. There was a market, there were exchanges for price discovery on Bitcoin, and we have been lucky to be involved in this technology early and see the price appreciation over time. The other reason why we're very special here is that very few people know about it just at this point. The technology is evolving at a rapid pace, and you essentially have access to an early technology that in the past has only been available to very select few people, part of sort of a big club or a big network of people in the know with access to vast sums of capital, and essentially only available to accredited investors. Opportunities available to accredited investors. Here, anybody, anywhere in the world, whether you're in a village in Kenya, or you're struggling with hyperinflation in Venezuela, or if you're here in the West, in the US, everybody has the same opportunity. They have no excuses at this point to be a part of this opportunity that's ahead of you. And it gets tiring to think that you're trying to time the bottom here, or looking for another lower low, or looking for $1,000 lows and nonsense like that. Yes, the market can shake out people. It can drop 30 and 40%. We know that already. We've seen that many times before. It doesn't mean you don't get your allocation at this point. Okay, so this is the last warning, last time I'm going to say this. Please don't ask me again. I'm not going to comment on this again. I with these videos going forward, assume that you have your HODL allocation for the 4-year cycle. If you want to understand my views on what the right allocation is, watch the last video. I cover the 10% sort of guideline on how much wealth or how much you should allocate to this. I have posted a 25 BTC $100,000 model portfolio that if you want to, you can mimic or follow. It's a public address that shows 25 BTC, and I'm going to essentially use that to highlight how I'm approaching the coming 4-year cycle and how I expect to get out with a lot of my positions going forward. It's also going to illustrate that I'm not going to be shaken out by this market. I'm not going to allow dips and significant moves here to throw me off my position, because I have a plan for the next 4-year cycle. And I'm going to show you something here that's very important. So you think this 100% move was something you're not going to see again? You're wrong. You're going to see 100% moves and 30 and 40% drops on a very consistent basis going forward. And if you're not prepared for those, if you think that you can take profit on each of these moves and then sell on the bottom and then buy again and so forth, sorry, sell the top and buy on the bottom again and then sell on the top all the way up and down, then you think you're a trader. And I can guarantee you that unless you're a qualified or skilled or you have success in trading, you're not going to beat the HODL approach over the next 4-year cycle. I'm showing on the screen here the 153-week uptrend in the bull market from 2015 to December 2017. And I'm only illustrating here in blue and red periods of 30% or more moves, either up or down, blue representing up, red representing down, price changes only over a 4-week or less period. So think about that. In 1 month periods, I'm showing you moves of greater than 30% on the upside, on the downside. And there are, believe it or not, 25, and it's actually probably more of them in there. I didn't spend enough time measuring every single sort of 4-week block, but there are at least 25 situations where Bitcoin moved at least by 30%. And if you feel that you're going to be able to time something similar to this going forward, what's going to end up happening is you're going to get something like this situation right here. Zoom in here, 36% decline right here. You're going to be looking for a low. You're going to miss it. It's going to rally sharply. You're going to think it's going to come back down, and then you're going to miss something like this, 215% move. And I can guarantee you'll never get back in. This move here, okay, went from $920 up to $3,000. You probably would not get back in at that point. Or if you do, you're going to get in with a small position. So again, just like we experienced over the last 8 weeks, where it went from 4,200 to 8,400, pretty much a 100% move. Most of you, a lot of you, even though you said, yeah, I'm in this for the HODL, I'm in this for the 4-year cycle, you already sold. You sold on the very first one of these 30+% moves. And if it keeps going from today, if the 6,400 or 6,600 area where it's at right now, if that's the low and it goes up to 9,000 tomorrow or next week, you may not get a position again for the next 3-year move. Okay, so it's very important that if you're going to go on this journey, if you're going to be a true hodler, as they say, then you need to be able to ignore all this volatility that's going to be coming up. And the only time that you're going to get cute on any of these moves is if you want to add to your position. So if you want to add some more, so let's just say your financial situation has changed a little bit, you have come across a little more money, a little more capital, or you've worked overtime, whatever the case is, and you want to increase your allocation somewhat, then maybe what you're going to be doing is looking for greater than 30% moves to add. So you're going to buy the dip in an uptrend. Buying the dip in an uptrend is a beautiful strategy and works really well. Okay, but you don't want to be looking to time the tops. In a bull market, timing tops is very difficult to do. Most of the time, it's just such a bullish move that you feel it can't go any higher, and it does. Just as, again, classic example, as we just experienced, many of you thought 6,200, like myself. 6,400 would be the top for the short term, but I didn't take anything off the table. I didn't want to risk losing my position, and that's going to come. And that incentive, or that that move higher, is going to be coming again and again and again. And as you can see from these blue bars here, 90%, 40%, 50%, 75%. 50, 200, 170, 150, 200. Those are huge 4-week moves where if you have, and let's just use my model portfolio as an example, right now it's valued at $180,000. If we get a bar, or four candle bar of even just 100%, right? That's a $180,000 move in that portfolio. So from $180,000 to $360,000. That's significant. Now, I'm expecting that at some point. I'm positioned for that. That's the whole goal of this 4-year hodl. But if you're only focused on the nominal price of your Bitcoin holding, then you're going to lose sight of the goal and the prize at the end of this journey, and you're going to suffer from sort of short-term greed, and you're not going to be able to sustain multiple moves like this. Again, example right here, 25 such moves over the 3-year rally. You need to be positioned, and you need to be thoughtful of the volatility that's going to be coming, and you need to be able to stop looking at the price on a frequent and daily basis. You need to stop waking up first thing in the morning when the alarm clock rings and going straight to your Bitcoin price chart to see what Bitcoin did over the last 6 hours of 8 hours of your sleep. You need to stop thinking and dreaming Bitcoin. It's obviously going to be an exciting journey, but you need to get out of that mindset, because if price and and greed dominate your thinking, you're not going to be able to take advantage of such a large move to come. All right, let's go into the final stage of this video and provide a little more hopium as well, so you can remember that this is about the prize and not about the short term. You've made some mistakes potentially here. If you haven't and you bought and you're fully allocated, congratulations. You executed the first portion of this beautifully. And like I just mentioned, there are going to be many, many tests coming up. And if you're prepared for them and you're ready for them, you'll be just fine. If you did not get your allocation and you're still kind of stubborn about it, there's not much more I can say. I've given you the evidence. I've given you my reasoning. How you choose to execute from going forward is really up to you. But I just want to show you that if we're here at 7,100 and this blue line here represents the previous all-time highs, and the goal for this move is up here, right, at the $250,000 area, then let's just zoom back in here. You're talking about this little area right here. That's what you're playing around with, and you're risking this entire move up. So just put that in perspective for a second. It's very important. And my goal still here is that over the next 150 bars, which is 150 weeks, or 3 years roughly. It may be shorter than that. We don't know when the top comes in any 4-year cycle, but the last two were similar length. Let's just even assume, for argument's sake, that it comes somewhere around here, for example, which is only 125 bars. We are already 25 bars into that period where the market could top. We could be looking at something sharper like this. Okay. So we could be looking at a market. We just don't know. And all these lines are just guides. I like to focus on time and looking at prior moves, 100x moves or 20x moves from previous breakout points as just a guide. But we could be getting up to all-time highs much sooner, by December even. It's not out of the possibility. Again, I don't expect it, don't believe it, but we need to be prepared for any such moves. And we could be looking at something like that. We could be, we don't know how it unfolds. All we know is that our goal is this over the next 100 to 150 weeks from this point going forward. At some point, most likely in 2021, where we peak, and we're just trying to get that right position here to ride that out. Let me just finish right now with another view of the market here from an market cap standpoint. So market cap to me is more important than the nominal price, because too many people focus on that big nominal price of thousands of dollars per Bitcoin, but it's so arbitrary. Bitcoin is divisible by 8 decimal places or satoshis at the lowest form. It doesn't matter which unit you use for the accounting purposes. It's irrelevant. Don't get hung up on the dollar amount. And when people think 10, 20, 30, $50,000 in those terms, they get sidetracked and think, well, it's just too much. It can't go that high possibly. But really what's important to focus is on the market cap. So how much is all of the Bitcoin worth that's out there if it was sold at any one given time? And right now it's only $128 billion. And I've grown up in New York here in the finance industry. I can tell you $128 billion, yeah, it's significant to some extent, but in the grand scheme of things, in where we expect Bitcoin to go from an adoption standpoint and how important I believe this technology will become, $128 billion is absolutely nothing when it comes to, compared to its potential. Even the previous peak here at 330 billion is nothing. Apple Corporation, for example, has more cash on hand than the entire Bitcoin network. They could use that cash to buy up. Obviously, they couldn't buy it up because the price would get forced higher, but in general, their cash hoard is worth more than Bitcoin is in total. I mean, just compare Bitcoin's market cap to, for example, the US government's treasury issuance or bond issuance. This is the debt that they issue every single month. Look at the calendar coming up here for bond and notes that are going to be issued by the government. This is just the US government, not the not the yen, not the Japan Central Bank or the European Central Bank or any other government or state government. This is the issuance here. Look at these notes that were sold. Here we go. Treasury offering, April 18th, 32 billion 7-year notes. May 1st, a couple of weeks ago, 38 billion in 3-year notes. May 1st, 27 billion in 10-year notes. May 1st, 19 billion in 30-year bonds. What's my point, you ask? Well, the US government has issued essentially $100 billion in debt just this last few weeks. Here we are talking about a revolutionary technology for money that is in the early stages, only being valued at $128 billion. Even gold, if we keep talking about Bitcoin as a store of value and we talk about gold, I know this is a very overplayed theme, so I know it's not new for many of you, but I want to illustrate this on the chart. Gold's market cap, so all the value of gold above ground in vaults, for example, and in storage for store of value purposes, because let's face it, the gold's true function is a store of value, a store of value that dates back thousands of years, that can command a value. If you look at market cap here, so we're at 128 billion, 300 billion was recent. I'm going to sort of zoom out and go up here. So, right, there's the $8 trillion level where gold is valued at. And here we are, and this is a log scale. So this is 128 billion only. Okay, so here's your $1 trillion level right here. I'm going to just draw one in. 1 trillion right here at around about the $58,000 level for Bitcoin. And here's in a log scale up to $8 trillion. Now, I'm not saying it matches gold's valuation in the next 4-year cycle, but this is the type of targets that we're looking at in the next coming 4-year cycle, somewhere between this $1 trillion valuation, which I think is the absolute worst case scenario for the 4-year cycle, at around about 56,000 or so, up to possibly the $4 trillion level, around about $200,000 for this cycle, then leaving the possibility of matching gold's market cap in the following 4-year cycle to come after that, some point in the middle of the next decade or so. So this is just to give you and illustrate from a market cap standpoint what the possibility is, and not to lose sight again of that prize and the reason for allocating and the reason for hodling, and what the potential is. So just to summarize very briefly this video, there's half of you seem like you're still in that get my allocation standpoint and not too focused on the long term yet, or focused on the volatility to come. So for you, I think, I'm not saying this is your last chance, but you're not going to get many chances to keep getting into this market as it moves forward. It's possible, yes, that we chop sideways for 3 or 4 months and not really do much from a price standpoint, but you don't want to be waiting for that or messing around on the allocation. And the other half of you seem like you're vested, you understand the journey. You may have been a hodler from previous cycles and saw Bitcoin go all the way up to 20,000 and rode that all the way back down. So you know how to ride your position, which is great, and you're looking more for how to exit that position. For you, that's going to come, right? The strategy for exiting is still well ahead. Plenty of time to focus on that. Trust me, I have a plan for it, and I will be sharing that with you, but it's a little early for that just now. I just wanted to illustrate more so the upcoming struggles and challenges that we'll face, which will be around how to deal with large paper profits on hand. So as Bitcoin gets to 10,000 and above, sitting on 100% and 200% gains, how do you psychologically handle that? How do you mentally prepare for that? And then also from a volatility standpoint, how do we deal with these 30 and 40% swings? And how do we not get into that panic where we feel that, is it possible that Bitcoin is going to go all the way back down and that's the end of the move? And here I was sitting on a 300% paper profit or a 400 or 500% paper profit, and I'm going to give it all back to the market. I don't want to do that. How do we handle the psychology around those dips? That's going to be the first focus of these videos going forward. I showed you the volatility to come as an example, so you're mentally prepared for that. Again, thank you very much for listening to these videos. If you want to share them, you're welcome to, of course, and I encourage you to. Thank you for listening, and until the next one, all the best.